Conservative wave buy on the Euro Kiwi. This is a chart of the Euro Kiwi on the hourly time frame, where we can see that price start to push lower from this high over here. Let's see. This high is at 154.80, and we had 1, 2, nice 3 moving the wave to clean and simple. Should be a zigzag. After we had a nice push down in the wave 3, followed by a slightly complex correction in terms of a flat, because we had a 3-wave move down, followed by a 5-wave move pullback. So we have a flat in the wave 4, and we had a wave 5 lower over here. What's important to us? It's important to have a 5-wave move down in the wave 5 so we can count the wave 5 completed. Also, there was some sort of a divergence between smaller 3 and 5 of the wave 5. So after that, after a 5-wave move down, we are looking for a 3-wave move pullback after an initial spike higher from 149.44 to 150.150. Let's see what we can see. We can see a smaller 1, 2, 3, 4, 5. So we have a 5-wave move. And this move looks like we respect all the rules. So let's move slightly over here. Price is still pushing around the highs, but it's starting to dropping a little bit. So we want to start looking for the long position, because we know that we can trade the wave C if we are going to go and see a zigzag correction. And since we have the 5-wave move in the wave A, we know that the only option for this larger correction would be a zigzag. So we are going to draw a Fibonacci retracement from start to drop of wave A, and we can use 150.45 as our entry point. So if we go and mark this over here, just to know where is our entry point, we can also mark the stop loss that is at the starting point of the wave A. Let's make it a different color, red. And now we want to go and try to find a potential target point. For a target point in the zigzag, we are going to use the 100% extension of the wave A. So we are comparing wave A and the wave C. Since right now we don't have the wave B, so we don't have something to project, we would use Fibonacci expansion tool in any case, draw from start to end of the wave A, and just leave it at the default 50%, because we want to buy from that level, and we go with that idea that the wave B will end at 50%. So our stop loss would go to 152.52 for now, because we are going to recalculate our target if price ends below the 50%. So we can see a price still consolidate, and finally we see that price tested our entry points. We would be filled over here. Our stop loss is here, our target is here. So what we do right now, we go and we recalculate our entry point, because we didn't end at the 50%. So we are going to move slightly lower our target. So from 152.52, we would move the target down to 152.30. And let's move on and see what market did. Market moved higher. And right now, we see that price break above the ending point of the wave A. And we can move the stop loss to the break even, just to create a risk-free position and see what's going to happen next. After that, we can see that price just tests our equal leg, so we would be filled at the take profit and our position would be closed in the profit. But even if price break lower, we wouldn't lose any money, we would just lose our time. Also, we can see a clear 1, 2, 3, 4, and 5. And you can see a smaller divergence over here. So you would know at the moment that even if price start to drop, that there is divergence, there are 5 moves already, so a good chance that the wave C is already over. Let me just label this as ABC so you can follow slightly better and you have a full picture why and what we did. So in this case, we didn't have too much things to do. We found the entry, moved the stop loss, but you don't need to move the stop loss if you don't have time. You can just leave it over here at the starting point of the wave A because you know that if you're right, your stop is going to hold. But I strongly suggest that after wave B or any wave that you project with the Fibonacci extension ends, you go and check if you need to slightly adjust your targets. So let's see, over here, we would make 180 pips, let's say, and risking 100 pips. Not the best risk reward, but we get 1, 2, at least for primary, so that's why we took this trade. But again, it's better than casino. So after that, we see what market did was pushed lower, because after a 3-wave move up, there should be a push down. That's all for this example. I'll see you all in the next one.